Welcome back, investors, to Ticker Time News. I'm Adam, and UiPath, ticker symbol PATH, continues down a bumpy road. Although the company posted its third straight quarter with earnings and revenue upside in Q4. Since jumping into the market in an oversized April 2021 IPO when shares opened for trading at $65.50 a share, the stock has fallen by over 60%, sliding over 50% in 2022 alone. The day UiPath went public, I cautioned that by trading with a frothy valuation of over 50 times trailing sales, when investor sentiment was starting to shift away from pricier tech stocks, shares of the company could see a rocky road ahead. And boy, oh boy, did they. As a result, even though UiPath's multiple has dropped to just 14 times forward sales as of the making of this video, the valuation keeps the stock in price to perfection territory, which UiPath did not reach in Q4. Now, don't miss out on the next best growth stock, value stock, dividend stock, or even momentum stock by clicking the first link in the description. I'll see you there. Now, starting out with the better part of UiPath's earnings, adjusted EPS did top estimates in the quarter, coming in at 5 cents a share, as did revenues, which climbed 39.3% year over year to $289.7 million. As a software as a service company, the company's annual recurring revenue, or ARR, tends to be eyed more closely, making UiPath's 59% annual recurring revenue growth year over year to $925.3 million a very positive standout. The stellar annual recurring revenue growth was fueled by a record net new ARR of over $100 million, which crossed the 9-digit milestone for the first time ever. Customer growth was also solid during the quarter. Customers accounting for at least $100,000 in annual recurring revenue jumped 49% year over year and 9.5% quarter over quarter to 1,493. More notable, those with over $1 million catapulted 78% year over year and 17% quarter over quarter to 158. UiPath's dollar-based net retention rate remained high at 98%. However, when a stock is priced to perfection, a few blemishes can overshadow the highlights, and that's what's happening with UiPath. UiPath guided to Q1 revenues of $223 to $225 million, well below estimates. Furthermore, UiPath expects fiscal year 23 revenues of just $1.07 to $1.08 billion, which also fell short of analyst predictions. As around 30% of its business is in Europe, UiPath understandably attributed its underwhelming guidance to uncertainty generated by the Russia-Ukraine conflict. For example, fiscal year 23 net new annual recurring revenue is projected to fall 8% when normalizing UiPath's paused Russian operations and FX headwinds. Overall, given the increased emphasis on valuations as interest rates rise and investors shy away from pricier cloud stocks, UiPath's bearish guidance is receiving all the attention, dwarfing otherwise positive Q4 results in the process. Now, I think the positive developments from Q4 should not be so quickly overlooked. Despite macroeconomic headwinds, UiPath is still set to grow over 20% year over year in fiscal year 23. Meanwhile, businesses' digital transformations are still ongoing, which further places focus on process automation. Therefore, even though UiPath could experience turbulence over the short term, especially if the conflict overseas drags on, its long-term prospects are still encouraging. Do you view this sell-off as an opportunity to open or grow your position? Let me know in the comments below, as your comments help us all to better understand UiPath. Smash that like button, share this video, and beat the market with us by clicking the first link in the description. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.